Cohen made that payment at Donald Trump's direction and for his benefit, and he did it with a specific goal of influencing the outcome of the election. Now, look, no politician wants bad press, but the evidence at trial will show that this was not spin or communication strategy. This was a planned, coordinated long-running conspiracy to influence the 2016 election, to help Donald Trump get elected through illegal expenditures, to silence people who had something bad to say about his behavior, using doctored corporate records and bank forms to conceal those payments along the way. It election fraud. Pure and simple. We will never know, and it doesn't matter, if this conspiracy was the difference maker in a close election, but you will see evidence in the defendant's own words from his social media posts, from his speeches at campaign rallies and other events. You will see in his own words, making crystal clear that he was certainly concerned about how all of this could hurt his standing with voters, and with female voters in particular. You will also see evidence that on election night, news outlets got closer to calling the election for Donald Trump. Keith Davidson, he was the lawyer for both Stormy Daniels and Karen McDougal, texted Dylan Howard at the National Enquirer, and he said, "What have we done?" And about a month after the election, Pecker then authorized AMI to release both Sajidin and McDougal from their non-disclosure agreements. So, having paid for the stories in order to keep them from the public before Election Day, Pecker and AMI then told both McDougal and Sajidin a month after the election that they were no longer bound by the non-disclosure agreements. In January 2017, Pecker met again with Donald Trump. This was before Mr. Trump was inaugurated. He was still working primarily from Trump Tower here in Manhattan, and they met privately in Trump's office. Defendant thanked Pecker for handling the McDougal and Sajidin stories, and he invited him to the inauguration. And that summer, the defendant invited Pecker to the White House. Pecker brought his eyes and ears, Dylan Howard from the National Enquirer, to that dinner. And the defendant hosted a thank you dinner to thank Pecker and AMI for their contributions to his campaign. There were a few other loose ends to deal with after the election. One was figuring out how Michael Cohen was going to get paid back for the Stormy Daniels payoff. In January 2017, before the defendant moved down to Washington to begin his presidency, Cohen met with Alan Weisselberg to talk about how Cohen was going to get reimbursed for the payoff for Ms. Daniels. Weisselberg, you will remember, was the Trump Organization chief financial officer, and he was one of the defendant's longest-serving and most trusted employee. Neither Trump nor the Trump Organization could just write a check to Cohen for $130,000 with a memo line that said, "Reimbursement for porn star payoff." They had to disguise the nature of the repayment, so they agreed to cook the books and make it look like the repayment was actually income, payments for services rendered instead of a reimbursement. Weisselberg asked Cohen to bring a copy of a bank statement for the Essential Consultants account showing the $130,000 payment that Cohen had made to keep Daniels quiet before the election. Weisselberg and Cohen agreed to a total repayment amount of $420,000. And here is how they got to that number. They started with the $130,000 that Trump owed Cohen for the Stormy Daniels payoff. Then they added $50,000 for a separate reimbursement Cohen was claiming, which had to do with tech services he paid for during the campaign. That adds up to $180,000. Then they agreed to double that amount to $360,000 to account for taxes. Now, of course, if Trump was just reimbursing Cohen, there was no need to gross it up for taxes. They doubled it because their plan was to call it income instead of a reimbursement. And if Cohen was getting money they were calling income, he would have to pay taxes on it. Cohen was close to a 50% tax bracket when you consider federal and state and city tax, so to make him whole on the $180,000 that the defendant owed him, they had to double the amount to $360,000. Then he had added another $60,000 as a year-end bonus. And all of that comes to a total of $420,000. And Alan Weisselberg wrote all of that down. The bank statement that I told you about that he asked Cohen to bring to their meeting, the bank statement from the Essential Consultants LLC account, which showed the $130,000 wire that Cohen had made to Keith Davidson to keep Stormy Daniels quiet, you will see in this trial Alan Weisselberg's handwriting down the side of that bank statement laying out every one of the steps that I just described, showing how they converted the $130,000 payoff amount to the $420,000 that Cohen was going to get paid back, as a grossed-up way to disguise it, not as reimbursement, but as income. Cohen and Weisselberg then met with Trump, approved that repayment amount of $420,000 on the $130,000 Stormy Daniels payment and a few others' expenses. Now, you will see evidence at trial that Donald Trump was a very frugal businessman. He believed in pinching pennies. He believed in watching every dollar. He believed in negotiating every bill. It's all over all of the books he has written. He ran the Trump Organization with total control. You will hear testimony about his relentless focus on the bottom line. But when it came time to pay Michael Cohen back for the catch-and-kill deal, you will see that he didn't negotiate the price down, he doubled it. And he doubled it so they could disguise it as income, and you will hear evidence that the Trump Organization was not in the practice of paying people twice what they owed for anything. This might be the only time that ever happened. And Donald Trump's willingness to do so here shows just how important it was to him to hide the true nature of Cohen's illegal payment to Ms. Daniels and the overall election conspiracy that they had launched in August of 2015. When Cohen and Weisselberg met with the defendant to agree on the doubled-up reimbursement amount, they decided they would pay it back in a series of monthly payments over the course of the entire year in 2017. Now, $420,000 spread over 12 payments comes out to $35,000 a month. You will see that calculation in Alan Weisselberg's handwritten notes, too. So the defendant and Cohen and Weisselberg agreed that every month Cohen would send a bogus invoice to the defendant through the Trump Organization, falsely requesting payments of $35,000 for legal services rendered in a given month of 2017 pursuant to a retainer agreement. That was a double lie. There was no retainer agreement. Cohen was not getting paid for legal services rendered in 2017. It was instead what they thought was a clever way to pay Cohen back without being too obvious about it. And in early February of 2017, Cohen went down to Washington, and he met with the defendant at the White House, and they confirmed that repayment arrangement. We are going to show you at trial a photo of Cohen at the White House for that meeting. And a few days later, after they met and confirmed the whole plan, Cohen sent the first of his fake invoices to the Trump Organization. And a few days after that, Cohen got his first reimbursement check. In total, Cohen submitted 11 phony invoices by email to the Trump Organization here in Manhattan so the defendant could pay him back. Each invoice repeated the lie that Cohen and defendant had agreed on in advance, that Cohen was requesting payment for legal services pursuant to a retainer agreement which didn't exist. Through these false business records, the defendant intended to make sure that nobody learned about the Stormy Daniels payoff and the illegal election fraud scheme launched at the Trump Tower meeting in 2015. The defendant's accounting staff at Trump Tower here in Manhattan then processed every one of those invoices as business records of the Trump Organization and retained them in the Trump Organization's files. The accounting staff recorded the reimbursements in the general ledgers, falsely, as legal expenses with a description of a retainer. The accounting staff then prepared checks that each included the description retainer. The checks were stapled to the bogus invoices for approval and signature. The first two checks were paid from a trust the defendant had created called the Donald J. Trump Revocable Trust, which held all of the Trump Organization's assets after he became president. The defendant was the beneficiary of that trust. Each of the remaining checks that were issued over the course of 2017 were paid from the defendant's own bank accounts. And the defendant signed those checks, each of them himself, while he was president. And the Trump Organization maintained all of those records, the false invoices, the vouchers with false entries, the checks with check stubs with false entries at Trump Tower here in Manhattan. And with the final payment in December of 2017, the defendant had repaid Cohen the full $420,000 they had agreed upon, and the monthly payment stopped. Now, during this trial you will hear a lot about Michael Cohen. I suspect the defense will go to great lengths to get you to reject his testimony precisely because it is so damning. You will learn, and we will be very upfront about it, the fact that Michael Cohen, like other witnesses in this trial, has made mistakes in his past. For example, Cohen will tell you that when the truth about the payoff to Stormy Daniels first began to come to light in 2018, he lied. He lied about it to protect his boss. You will also learn that Michael Cohen has a criminal record. He will testify that in April 2018, the FBI raided his residences and his office as part of an investigation that included potential violations of federal campaign finance law. Cohen will also testify in this trial that he ultimately pled guilty and went to jail for causing an unlawful corporate contribution in connection with the Karen McDougal payments and for making an excessive campaign contribution in connection with the Stormy Daniels payoff. Whereupon, senior court reporter Lisa Kramsky is relieved by senior court reporter Lori Eisenberg, and the transcript continues on the following page. He also pled guilty to and served time for tax crimes and lying to a bank and lying to Congress. And you'll also learn that Cohen has publicly committed to making sure the defendant is held accountable for his role in this conspiracy. The evidence will also show why you can credit Michael Cohen's testimony, despite those past mistakes. As we discussed in jury selection, you will need to keep an open mind and carefully evaluate all of the evidence that corroborates Michael Cohen's testimony and the testimony of all of the witnesses. Cohen's testimony will be backed up by testimony from other witnesses you will hear from, including David Pecker and Keith Davidson. It will be backed up by an extensive paper trail of bank records, emails, text messages, phone logs, business documents, and other records that we will show you, sometimes at length, during this trial. And it will be backed up by Donald Trump's own words on tape, and social media posts, in his own books, and in video of his own speeches. Now, as I said when I started, this case is about a criminal conspiracy and a cover-up, an illegal conspiracy to undermine the integrity of a presidential election, and then the steps that Donald Trump took to conceal that illegal election fraud. At the end of the case, we are confident that you will have no reasonable doubt that Donald Trump is guilty of falsifying business records with the intent to conceal an illegal conspiracy to undermine the integrity of a presidential election. And as you credit all of the evidence the people will present, we ask you to use your common sense, past any distractions, look past any irrelevant sideshows that may pop up during this trial. Tune out the noise. Focus on the facts. Focus on the logical inferences that follow from those facts. Focus on the evidence. Listen to the testimony. Read the documents, the emails, the text messages, the bank statements, the handwritten notes, all of it. And, after all of that evidence is in, we'll have a chance to speak to you again during closing arguments. My colleague, Joshua Steinglass, will go through all of that evidence and explain that it, inescapably, leads to only one conclusion: Donald Trump is guilty of 34 counts of falsifying business records in the first degree. The court, thank you, Mr. Colangelo. Counsel. M.R. Blanche, good morning. Good morning, Your Honor. The court, good morning. M.R. Blanche, President Trump is innocent. President Trump did not commit any crimes. The Manhattan District Attorney's Office should never have brought this case. You've heard this a few times already this morning, and you're going to hear it a lot more during this trial. The people, the government, they have the burden of proof to prove President Trump guilty beyond a reasonable doubt. What that means, as Judge Merchant said a few minutes ago, is that President Trump is presumed innocent. He's cloaked in innocence. And that cloak of innocence does not leave President Trump today. It doesn't leave him at any day during this trial. And it won't leave him when you all deliberate. You will find that he is not guilty. Now, President Trump, you've seen him, of course, for years and years and years. You've seen him on television. You've seen photos of him. You've seen articles written about him. He's in some ways larger than life. But he's also here in this courtroom doing what any of us would do, defending himself. You're going to hear me, as I've done already today, and others, even witnesses, refer to him as President Trump. This is a title that he has earned because he was our 45th president. We will call him President Trump out of respect for the office that he held from 2017 to 2021. And as everybody knows, it's the office he's running for right now. He's the Republican nominee. But, and this is important, not just our former president. He's not just Donald Trump that you've seen on TV and read about and seen photos of. He's also a man. He's a husband. He's a father. And he's a person, just like you and just like me. What the people just did for about 45 minutes is present to you would appear to be a very clean, nice story. It is not. It is not simple, as the people just described. For one, and you heard the people admit this, most of what you are going to hear about in this trial, most of the conversations, most of the documents are from 2015, 2016, 2017, years and years ago, pre-COVID, and you're going to hear witnesses talk about conversations, meetings, people they met with from 2015. The story that you just heard, you will learn, is not true. And at the end of this trial, there will be plenty of reasonable doubt. Here's what I expect that you will learn happened. President Trump, for years, built a very large, successful company. He employs thousands of people. It's a purely private company. Not like AT&T or FedEx, publicly traded. And when he became president in 2017, he put up a wall between himself and his company, as the people just alluded to. He put his entire company in a trust. He did this so that he could run the country, and he wouldn't have anything to do with his company while he was president. But some of his employees, you'll learn, continued to help record personal expenses that President Trump incurred while he was president. Not surprising. They had been doing that for many years. You'll hear they're still doing that today. So when President Trump became president, when he took the office of the presidency in 2017, in January, Michael Cohen, who you heard the people allude to, assumed the role of President Trump's personal attorney. And you will learn that each month in 2017, Michael Cohen sent an invoice to some of the employees at the Trump Tower, right here in Midtown, the Trump for $35,000. And on this invoice, Michael Cohen described his work as payment to the retainer agreement for legal services rendered. The invoice was processed. Somebody at Trump Tower generated a check. The check was ultimately signed, and there was a record in a ledger on President Trump's personal records that reflected the invoice. For 9 of the checks, the check made its way down to the White House, and President Trump signed it. You'll hear that he's the only signatory on his personal checking account, which is why he signed the check. So, what on earth is a crime? What is a crime about what I just described? This business records violation that the people have brought against President Trump, the 34 counts, ladies and gentlemen, are really just 34 pieces of paper, the 34 counts of the invoices that Mr. Cohen sent to the folks at Trump Tower, the checks that were generated because of that invoice, and then the ledger notation from the invoice that said for retainer agreement and legal services. None of this was a crime. Now, you just heard the people's theory about that $35,000, that it really wasn't a monthly retainer, that Michael Cohen was actually trying to cover up with President Trump the payback of this $130,000 payment to Stormy Daniels, who also goes by Ms. Clifford, Stephanie Clifford. You'll hear that Ms. Clifford, Ms. Daniels, did, in fact, sign an NDA in October of 2016 in exchange for $130,000. But, think for a moment of what the people just told you. President Trump did not pay Mr. Cohen back $130,000. President Trump paid Michael Cohen $420,000. And in the same breath, the people told you that President Trump is known as a frugal businessman, that he pinches pennies. Ask yourself, would a frugal businessman, would a man who pinches pennies repay $130,000 debt to the tune of $420,000? More significantly than that, ladies and gentlemen, you're going to learn that this was not a payback. The $35,000 a month was not a payback to Mr. Cohen for the money that he gave to Ms. Daniels. He was President Trump's personal attorney. You will see documents, you will see emails. His signature block, Michael Cohen's signature block in 2017 said Michael Cohen, personal attorney to President Donald J. Trump. You will hear that he told people that he served as President Trump's personal attorney. You will hear that he did legal work for President Trump and the First Lady as his personal attorney. Now, the people talk about the ledger. I mentioned the ledger a few times. Listen, the ledger is just a fancy way of describing how folks at Trump Tower, employees that work for President Trump, kept track of the money that came in and the money that went out. There's nothing fancy about a ledger. It's something, I suppose, like a checkbook, where you keep track of what you're spending money on. And I expect that you will learn that the record, the ledger that was used in this case that President Trump is charged in part with, that the information that was placed in that ledger was done by someone named Deb Tarasoff. I expect she will testify. You will hear that she's a woman who has worked for President Trump for decades. Nobody is going to say she did anything wrong. I don't expect the people will say she is part of this scheme. What she will tell you is she had a conversation with another boss, someone who she worked for, another accountant, someone who has nothing to do with this. And she was told when she got the invoice from Mr. Cohen to call it legal expense, which is exactly what the invoice said. And that's exactly what she did. And then, after recording it, she generated a check, which was her job. And then, again, for 9 of the 11 checks, the checks made their way from Trump Tower, here in Midtown, to 230 miles down south to the White House, where they were signed. But, and you heard this again from the people, I am not saying anything controversial. President Trump had nothing to do with the invoice, with the check being generated, or with the entry on the ledger. Ms. Tarasoff isn't going to say she had any conversations with President Trump. Hey, how should I book this? How should I book this to keep it secret and keep it quiet? And the invoice says it's for services rendered. It's Michael Cohen. He's a lawyer. He worked for the Trump Organization, you'll learn, for many years. You won't hear any of that. Her boss, the person who told her how to book it, he's not going to say he talked to President Trump about it. He's not going to say that he called the White House and interrupted a meeting as President Trump was running the country and said, hey, we got this invoice, I know we're trying to cover it up here. Absolutely not. You'll learn President Trump had nothing to do with any of the 34 pieces of paper, the 34 counts, except he signed onto the checks in the White House while he was running the country. That's not a crime. So, and some of you heard this last week during jury selection. What are the people going to do? I don't expect they're going to dispute what I just said. I don't expect they're going to call a witness that says that President Trump had anything to do with what was written on the ledger, with generating the check, with the invoice coming in. So, you heard last week, and I expect you'll hear it during this trial, this idea of accomplice liability, the idea that the people can get around the complete lack of knowledge or intent by President Trump. And, look, the reality is, President Trump is not on the hook, is not criminally responsible for something that Mr. Cohen may have done years after the fact. The evidence will prove otherwise. You also heard a awful lot of communication about the 2016 election. The people just told you that the reason why these invoices were recorded the way they were recorded way after the election President Trump was already in office was to cover up for Mr. Cohen. Suggesting that Mr. Cohen was somehow trying to influence is the word they used, the 2016 election. I have a spoiler alert. There is nothing wrong with trying to influence an election. It's called democracy. It was they put something sinister on this idea, as if a crime. You'll learn it's not. Michael Cohen paying Stormy Daniels or Stephanie Clifford $130,000 in exchange for her agreeing to not false claims about President publicly spread false Trump is not illegal. I'm going to say that again. Entering into a non-disclosure agreement, M. Arthur Colangelo, objection. The court sustained. M. Arthur Blanche entering into a non-disclosure agreement is perfectly legal. M. R. Colangelo, the court, objection. Overruled. M. R. Blanche, you will learn that companies do that all the time with some regularity. Executives, people.